So we're continuing our series here in Module 1 in Business Foundations and the legal considerations for starting a practice or what entity registration you are. Even if you're already in practice and you already have a running business, this is something, once you hit a certain threshold, you're probably already registered as an LLC. If you're a sole prop, you should be moving it to an LLC already. Um, if you've just started your practice, I understand. But if you've been in practice for maybe a couple of years by now, you should have changed your sole proprietorship or partnership into an LLC by now. Um, so I would suggest doing that first. But outside of that, once you make a certain amount of money, let's call it $25,000, $30,000 or more, as far as the advice that I've been receiving from my tax person and strategy person, you really want to get it over into an S corp. And I didn't think that that was something you should be doing until you made much more money, maybe like in the six-figure range. And that information that I got was just bad. And the suggestion or recommendation, at least now, I mean, it's 2024, tax codes can change. Currently, if my company or my business was drawing and I was taking home more than $25,000, it would be more beneficial for me to have an S corp election. So we switched our entity registration and then we backdid our taxes for the last 3 years, and I saved tons of money, like tens of thousands of dollars. So it turns out, as an S corp, what this means, it's like a special type of corporation. It's not necessarily a corporation, but it's also not necessarily a limited liability company. And it's created through the tax election process. So you have to switch your entity registration and elect to be an S corporation. And as an S corp, what happens is the liability changes. So the shareholders have limited liability, and you can have a single member shareholder. You don't have to have a bunch of people on a board and this kind of stuff. So I am the only shareholder. I own 100% share of my company, and as the shareholder, I now have a limited liability similar to an LLC, but more so in the corporation aspect of how liability works. So it's very similar to a corporation in liability, and you're really detaching yourself now from your company. And if anything at all happens to your company, it is totally separate from your personal assets. As far as taxes are concerned, it's going to now still allow for profits and at least some of your losses to be passed through directly to the owner's personal income without being subject to the corporate tax rates. That's why it's like an S corp. It's like a mini corporation almost. And you don't have the corporate tax rates, but you do have the liability coverage and the protection from your personal assets, and you can still pass the income through to your personal income statement. So there's a lot more fine details here, and I'm sure a real tax professional could give you more information. This is a very quick video, but once you start making a certain amount of money, make sure you talk to a tax professional and ask them what the benefits are for you to get into an S corp. And if they really don't know the answer, talk to a couple people, because I asked my current accountant, who had been doing my taxes for the past 10 years, and I asked him, hey, could you run my taxes as an LLC or an S Corp and see if it would benefit me at all? And he ran the numbers and he said, no, it would benefit you to still be an LLC. So I talked to a couple other people, and turns out that I finally talked to somebody who registers S Corps all the time, and he's more of a strategy tax professional, and it is a little more expensive, but he's like, no, 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 you got to go to an S Corp right away. And if you're making $25,000 or more, you could be saving a lot in the amount that you pay in taxes. So we can back do the last 3 years. There's a filing deadline, so you pay a couple deadline fees, but I'll do an assessment for you. So he does an assessment, ends up saving me like $10,000 a year for the past 3 years, and the one I ended up getting back like 20 grand. So an amazing amount of money that I was overpaying in taxes simply because I didn't have the right entity registration. And one of the biggest barriers to the entity registration and why I ended up delaying this is because there's a lot more red tape around S corps. Operationally, it is more complicated than LLCs, partnership, and sole props. You don't have to do a lot of like dot your I's, cross your T's, and make sure you check all these boxes to be in compliance. Once you get to that S Corp, you do need to be in compliance with a list of things. I don't have that list of things. If you want that list of things, it's posted for free on the SBA website, which is the Small Business Administration website. Just go to sba.gov, and they post all the things that you need to be in compliance with an S Corp. And there's just a list. I think it's like 19 things that you need to do, and some of them are, you have to adhere to these like specific operational processes, and you have to hold annual meetings, which you hold an annual meeting with yourself, and you have to hold meeting minutes and make sure you're documenting it well. And there are just certain things that you need to be doing, and the way that you need to be running your books and accounting and making sure you're accounting for different things in order to be in compliance with an S Corp, so that you can get the benefits of saving $20,000 a year. And I don't make a whole lot of money, so it's not because I made so much that I save so much. That's not really how it works. Like, I'm barely, well, I don't want to give over my personal finances, but it wasn't an exorbitant amount, and I still saved an exorbitant amount just because I switched to an S Corp entity registration. So I would strongly encourage you to talk to a tax professional. If you're making more than $25,000-$30,000 a year, it may be beneficial for you to switch over to an S Corp. And this is probably where I would suggest most people end up, is as an S Corp. I looked into the other entity registrations. There's other ones too, and they don't really seem to be relevant to our industries. As a small business with less than 50 employees, S Corp is pretty much where you're going to land in the massage therapy industry. And this was a huge money saver for me. So I would strongly encourage you, if you're in private practice, you've been doing it for a couple of years, go over to S Corp now. And if you're not, and you plan on, you always start with the end in mind, right? You always begin with the end in mind. So the long-term goal is for you to make a lot of money as a business owner. Maybe you start off as a sole prop and then time it out and say, okay, by this date, I'm going to make X amount of money, so I need to go to an LLC. And then by this date, I plan on making X amount of money, so I'm going to switch over to an S Corp, so that you don't have to backdate your taxes and redo your entity registration. You're going to save yourself a lot of time, a lot of money, and a lot of fees by making sure you plan out when to get to the LLC and plan out when to get to the S Corp. And if you got to pay a tax professional to do that, do it. It's not super expensive. A couple $100 could save you tens of thousands of dollars in taxes. And I would just strongly recommend that you talk to a tax professional, because this is a very quick video and you're not going to get the things that you need from it. It's just an introduction into the legal considerations. So make sure you talk to a tax professional about getting into an S Corp right away. All right, stay tuned for the next video. After this, we're done with legal considerations for entity registrations, and we're going to get it further along in the business foundations in Module 1.